Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Great to have you with us back here at AusBiz. We're looking for a positive start this morning. This comes after global stocks were mostly higher overnight. Investors refocusing on earnings results amid the uncertainty over tariffs. On Wall Street, investors appear to look past some disappointing Alphabet earnings, although they did drag on the NASDAQ. Shares in the Google parent fell heavily after posting downbeat cloud revenue growth and flagging a higher than expected $75 billion investment for its AI build-out this year. And AI-related stocks such as Nvidia showed further signs of recovery after being sold off last week on the emergence of the cheap AI model developed by DeepSeek. Shares in Advanced Micro Devices dropped sharply after the chief executive said the company's current quarter data center sales, perceived as a proxy for its AI revenue, would fall about 7% from the previous quarter. Apple slipped on reports that China's antitrust regulator is preparing for a possible investigation of the iPhone maker. Uber reversed sharply after the ride-hailing company forecast current quarter bookings below estimates. FMC Corp plunged after the agri-chemicals producer forecast first quarter revenue below estimates. And car maker Ford reported after the bell, projecting up to $5.5 billion in losses on its EV and software operations this year as it deals with difficulties in cutting costs on battery-powered models. Well, the US services sector activity unexpectedly slowed in January as weaker demand curbed price growth. The ISM Non-Manufacturing Purchasing Managers Index remained in expansionary territory but slipped to 52.8, and private payrolls growth picked up in January. Meanwhile, the US trade deficit widened sharply in December as imports surged to a record high ahead of the turmoil over tariffs. It was the second largest deficit on record and the largest monthly increase in 10 years. Meanwhile, US Treasury yields have fallen to multi-week lows, weighed down by the weak services sector data and uncertainty over trade. The 10-year down around 8.5 basis points at 4.42. The 2-year at its lowest level in about 2 months, down at 4.17%. And the US dollar has fallen to its lowest level in more than a week. The Aussie, meanwhile, having strengthened to 62.8, and Bitcoin trading around $96,500. On the commodities front, oil prices have fallen more than 2%. This as a large build-up is developing in the US crude and gasoline stockpiles, signalling weaker demand. Brent crude futures around $74 a barrel. Copper has risen more than 2%. Iron ore down around 1%, just shy of $104 a tonne. And gold has continued its recent ascent, rising to $2,860, another record, that on safe haven buying. Let's get across what we're seeing on markets then. Ira Epstein joining us from Linn Associates. Ira, good to have you back on the show. I haven't spoken to you for 2 weeks. Goodness, a lot has happened in that time as Donald Trump takes effect. Where do we start? Because it has all been about tariffs. How do you see this playing out? We know how he's a transactional president. Is he getting his way, do you think?
Well, you can answer that question. He wanted a lower dollar. The dollar is down in the past 3 days, about 250 points. That's a lot in the futures markets. He wanted to see interest rates fall. They're down to 4.42. We're not talking 4.75 or 4.8. He wanted oil prices to come down, and they're slipping. So for the first 2 weeks, and that's all that we're talking about of his presidency, he's sort of getting what he wants. He measures himself by the stock market, and by most accounts, you're knocking on the door of all-time highs. So he's winning at this point. Is there uncertainty? Why do you think bonds and notes are falling in yield? People are plowing into them because they don't know what to expect. We saw the way that he deals with foreign countries. It's very simple. He talks softly and carries a big stick. We had a president called Teddy Roosevelt, and that's what it is. But he won't be able to do that with China. With China, it'll be a different way that has to be negotiated because their economy's too big to push around. As for everybody else that he runs into, he's not fearful of that. He will push around. And as you know, we saw Colombia. We saw he suddenly buddy with Ecuador. We've seen that the tariffs that were put on Mexico and Canada were put into abeyance for a short period. So the next step that this administration is doing is they've got to figure out how to get the trade deficits fair. I want to make the word fair. Don't look for no trade deficit. We're too big of an economy. That isn't the case. The question in the president's mind is what's fair. And that's where I think we're at. He's still feeling his way. The cabinet's not all been approved at this point. They will be. But you need a vacation after the first 2 weeks. I tell you, trader upon trader I talk to, they're worn out.
Yeah, of course, and now perhaps attention turning to the EU, which is threatening as well with tariffs. Interesting, because I just mentioned that data, Ira, US trade deficit widening in December. Is this, you're trying to get ahead of those tariffs? Is that what that was about?
For sure that's what it was about, because country upon country was sending goods into America because nobody knew what was going to happen. So in America, we front ordered goods. We're not going to run out of anything. We can afford at this point just a 10% extra tariff. But, you know, for certain companies that bring items in, washing machines, dryers, Ford brings some cars in, 10% isn't going to change the game from where you've been. 20, 30% changes the game dramatically. Then you have to worry about the supply channels, what's going to happen there. But at this point, you know, I didn't mention Panama. Suddenly, U.S. warships go through the Panama Canal free. You do understand that. The Belt and Road Initiative between Panama and China is over, and they are going back to kowtowing and understanding who built the canal, I guess, in Trump's words, and where it's at. Remember, he says a lot of things, they don't come through. We're not going to be plowing through and buying condominiums in Gaza. I'm telling you that right now. It's not a Mediterranean Riviera.
Yes, that was certainly one out of left field. Ira, so is your expectation perhaps, are we going to see the dollar continue to weaken from here, given that uncertainty, those bond yields also, and obviously gold going from record to record?
The easiest one is gold. As you know, you and I have been talking, and I've been bullish for quite a while here. Today's the first day in a while that I paired back on long positions. So I thought you were high enough. And over a study I use called the Bollinger Bands. The Bollinger Band's an algorithm designed to keep the market trading within it 95% of the time. It's been running on it to the upside, but if you start looking at the weekly and daily charts together, just getting a point where I wanted to cut down the position, not out of it, cut that down a little bit. As for the dollar, I don't know what to do with the dollar. I didn't expect the weakness that we've had over the past 72 hours in it. So I have to go back and figure out, which I've tried to do, but I can't figure it out. Why did this occur? What is going on? Has the dollar peaked out against the 110 level? There's a possibility that that's the case. So I think you want to be careful. The currency trade right here is very difficult. It's the biggest market in the world, and traders are getting whipsawed. You just look at your own Aussie dollar. It's come off the lows and rallied very nice. Is it warranted? I don't know. So for the moment, I'm pretty much sidelined there. I'm finding it easier to trade the stock ETFs for the moment than I am trading the other markets, the futures. Futures right here are whipsawing. Have we made a top in the meat markets? There's an article you're going to read about tomorrow. They're now saying that bird flu in Nevada has affected a herd of animals, cattle. I've never heard that happen before, and here we are. What does that mean for the markets? Is it reality? But it was breaking news just a few minutes ago. So I look at Cargill throwing in the towel on their pork business in America and just saying, we're going to give it to JBS. So there's a lot going on. It's only the second week of the year. There's a lot to do with it. But I think that the stock market is still in the bull camp, and that is going to be the barometer that Trump judges himself by.
Okay, so you mentioned that bull market that we're seeing continue to play out on the stock market. What are you making of the latest earnings results? Plenty of them still coming to us. We had Alphabet today. Also, interestingly, Ford is continuing to struggle.
Well, Ford has given up on electric cars in America, and they're right to have done so. The electric car is a wonderful vehicle if you live in a big metropolitan city, but if you travel out of that city, terror sets in because in America, we don't have charging stations everywhere. You almost have to go to from a Walmart, if they have one, to another Walmart. This is the problem. The good news is Shell announced that they're going to close 700 and I think 83 service stations in the United States, but they're going to convert them to electronic charging stations. So they're not just closing the business, they're going to make conversions. This takes time. They'll get that done. The cars that probably in America have done the best, and I think everyone knows it, are the hybrids. And now we're going to get what's called an extended range electric vehicle. And what those are there cars that will have built-in generators. And via that generator, it'll get rid for the American public the fact that you can run on what you've got, and it's going to keep going. You probably get 600-700 miles with some of them, they claim, but they won't be here for another year. But they're the beginning of the process. So you're getting your change. We're just not going to accept it as fast as the Netherlands and other countries have done. I don't know what they're doing in Australia, but I imagine driving around the outback, there's not a lot of places you can get your car charged.
Yeah, a similar story in terms of range anxiety. Ira, very quickly, those AI-related stocks, of course, seems like ancient history just in terms of talking about what happened with DeepSeek. How are you seeing that at the moment, particularly questions over that very large CapEx spend?
Well, let's understand where we're at. There's two types now of AI. There's going to be a low-cost AI and a high-priced AI. At the end of the day, AI counts on computers to do fast computing. Nvidia wins that battle hands over. So you can get things done, as DeepSeek showed, by creating better software that better utilizes not as powerful chips or clusters of chips, and that's one way to go about it. It's why Palantir is taking off to the upside. However, there's plenty of room for the Nvidias, and don't buy into this thing that AI is ahead of itself. This is like flip phones were when we got rid of those and we went to the Apple handset. This is here to stay. It's going to be in every program you use. Try to download a new program and see that you don't have Chat GPT or something else open source in it. There's something somewhere in these. So just expect that there's two different types. You get punished when you spend more money. You'll get the reward a year and a half from now when you've spent the money, and others got to spend even more money to get where you're at.
Ira, thanks for joining us from Linn Associates.
Thanks for having me.
A check of where we're going to get going, and locally looking for a very positive start. SPI futures up 0.75%. Stay with us because the open is just a couple of minutes away.